Most people imagine power as something visible: flags, speeches, elections, wars. But in modern America, the true centers of power are hidden inside glass towers, guarded not by soldiers, but by algorithms, contracts, and data streams. They are the hedge funds, private clubs of capital that quietly shape the world beneath the surface. A hedge fund isn't a bank, a corporation, or a government agency. It's a pool of money from the wealthiest people on earth, managed by a handful of traders who can bet on anything: currencies, countries, or even the weather. Unlike regular investment funds, hedge funds operate in the shadows of the financial system, free from many rules that constrain others. They are designed to move fast, stay secret, and profit from anything up or down. The first hedge fund was created in 1949 by Alfred Winslow Jones. His idea was simple but revolutionary: use borrowed money to amplify gains and balance risk by betting against falling stocks. It wasn't gambling, it was engineered uncertainty. By the 1980 seconds, after waves of deregulation, this concept exploded. Money became pure information, and hedge funds were its most efficient processors. In the 1990 seconds, hedge funds stopped being background players. They began moving entire economies. George Soros's quantum fund famously bet against the British pound, earning over $1 billion in a single week and forcing the UK to withdraw from the European exchange rate mechanism. It was a warning to governments. Even nations could be cornered by private capital. But for every Soros, there was a cautionary tale. Long-term capital management, LTCM, run by Nobel Prize-winning economists, collapsed in 1998. Their complex formulas couldn't predict human panic. The Federal Reserve had to step in and organize a bailout to prevent a global meltdown. That moment revealed something critical. Hedge funds were now too big to fail. They had become systemic. After the 2008 financial crisis, a shift occurred. While banks struggled under new regulations, hedge funds slipped into the cracks. They became lenders, landlords, and political donors. As millions of Americans lost their homes, hedge funds were buying entire neighborhoods at foreclosure auctions, not just one house, but thousands at a time. By the 2020 seconds, some hedge funds owned more residential real estate than major home builders. They had discovered a new frontier: the shadow banking system. Quietly, hedge funds began lending directly to corporations, financing takeovers, even providing emergency credit to governments. This private credit market ballooned to over $2 trillion by 2024. Traditional banks had balance sheets. Hedge funds had freedom. They learned how to profit from chaos. During the 2020 pandemic, as markets crashed, hedge funds shorted stocks, earning billions as fear spread. Then, as central banks printed trillions to stabilize the system, those same funds bought the recovery, doubling their gains. They didn't just survive volatility, they created it. Hedge funds make money not by predicting stability, but by anticipating disruption. They thrive in the space between panic and recovery. They buy what others are forced to sell. They sell what others think will never fall. Every crisis becomes a strategy. Every shock becomes an opportunity. But their real power isn't in trading, it's in influence. Hedge funds learned long ago that the best investment isn't a stock, but a law. They hire former regulators and politicians, turning the revolving door between Wall Street and Washington into a highway. They donate to campaigns, fund think tanks, and quietly shape legislation. Financial derivatives, once considered exotic, became mainstream tools, partly because hedge funds lobbied for them. Their algorithms now monitor not just markets, but human behavior. They buy data from satellites that track parking lots, fields, and shipping containers. They analyze credit card records, social media sentiment, even heat signatures from factories. With enough data, a hedge fund can predict earnings before a company announces them, or sense political unrest before it hits the news. Information isn't power, it's profit. And while they operate in private, their reach touches the public. Pension funds, the savings of teachers, firefighters, and public workers, are invested in hedge funds seeking high returns. That means the retirement dreams of millions are tied to the success of private capital. When hedge funds win, pensioners win. When they lose, taxpayers often pay. It's an invisible loop: public money feeding private empires. Hedge funds insist they make markets more efficient. And in some ways, they do. They provide liquidity, absorb risk, and expose weakness. But their dominance comes with a cost: concentration of power. When a handful of funds control trillions of dollars, their decisions ripple through every part of society: rent prices, food costs, job markets, even political stability. In the past, empires controlled trade routes. Today, hedge funds control the routes of money itself. The old merchants of Venice built fleets. The East India Company built colonies. Modern hedge funds build systems: digital, financial, and psychological. They don't conquer with armies, they conquer with leverage. Some say hedge funds represent capitalism at its purest risk and reward, unfiltered by bureaucracy. But others see a quiet coup: the privatization of the world's balance sheet. When crises hit, governments intervene to protect the system. Yet the system increasingly belongs to those who can bet against it and still get rescued when it breaks. Their advantage isn't just capital, it's time. Hedge funds don't think in election cycles or fiscal years. They think in waves of liquidity, regulation, and public emotion. They wait for the tide to turn, then move faster than anyone else. Technology has turned them into something beyond human traders. AI-driven funds now analyze millions of variables per second, adjusting positions automatically. Algorithms whisper to algorithms, creating feedback loops that no regulator can see in real time. The financial system has become an organism self-learning, self-replicating, and partially autonomous. When a hedge fund bets, it isn't just predicting the future, it's shaping it. Their trades move prices, influence news coverage, and shift corporate behavior. A single fund can pressure a company to cut jobs, sell assets, or change leadership, not through ownership, but through expectation. In markets, belief is as powerful as reality. Over time, their networks of influence extend beyond finance. Hedge fund managers fund political campaigns, buy media outlets, invest in tech platforms, and sponsor universities. They don't need to control the government, they just need the government to depend on them. This dependence is subtle but profound. When the Federal Reserve moves interest rates, it isn't just managing inflation, it's managing hedge fund leverage. When Congress debates regulation, it's negotiating with unseen giants who can shift billions with a keystroke. Even presidents measure their policies against market reaction. The invisible hand has become a very visible master. Yet, despite their power, hedge funds exist in a fragile ecosystem. They depend on confidence from investors, from markets, from governments. When that confidence breaks, so does the illusion of control. Crises remind us that leverage cuts both ways. The same strategies that make them rich can also destroy them overnight. Still, the cycle continues. Each crisis resets the game, and each recovery concentrates power even further. The players change, the strategies evolve, but the outcome remains: more wealth, more influence, less transparency. If the 20th century belonged to industrialists and oil barons, the 21st belongs to data and debt architects. The new rulers don't wear crowns or command armies. They manage algorithms and control flows of capital. They don't need to own the White House when they can own the market it depends on. And so, America's quiet rulers operate without slogans or parades. They don't campaign, they calculate. Their boardrooms replace battlefields. Their spreadsheets replace constitutions. The power once measured in votes is now measured in volume of trades, of assets, of information. In a world built on credit, those who decide who gets it and at what price hold the keys to everything. Hedge funds are not just betting on the future, they are building it. One trade, one law, one data point at a time. The question isn't whether hedge funds control America. The question is whether America still controls itself.